Hello investors, welcome to Simpli Stocks. Today I am going to talk about Kalyan Jewellers. Previously I was planning to cover this business along with 2 to 3 other stocks in a single video like our other videos. But this week the stock has fallen so sharply that I felt Kalyan Jewellers shareholders must be very worried right now. So I decided to make a separate dedicated video on it. So in today's video, we will be discussing the recent March quarter results, what was discussed in the Concall, management's outlook for the future, and also this entire situation where first Modi ji said people should avoid buying gold, and then the government imposed import duty on it. So we will be discussing all these things, and now without any delay, let's get started. I won't stretch today's video unnecessarily because honestly, there's not too much to talk about. Their con call was also plain and quite simple. First, we will look at the results that are out, and then I will talk about the current scenario. So, Kalyan Jewellers now has 342 stores in India and 41 stores internationally. They have also reached 124 store count for Candere, but Candere does not have that much of a contribution to their sales and profits. Although it has become profitable, that is a different thing. But like every time, I won't talk about Candere. Then they have been paying off their debt, and their target or guidance is that they will become debt free by the end of this year. And when I say debt free, gold metal loan is not counted. Every jeweler has to use GML, gold metal loan, so that will stay there. Now in this year, meaning FY27, their target will be to open approximately 94 to 95 new stores, which if you look at the store count level alone, represents 25% growth. Now, if we assume a 10 to 15% SSG, meaning the sales growth that will come from old stores, and then Kalyan can easily, or I'll say Kalyan has the potential to easily grow its sales by 35 to 40% even this year going forward. Now, as for the risk from import duty that we will talk about, but let's say on standalone basis, this is what we can expect. Now, let us look at the results. So here you will see that their sales have increased by a massive 66% year on year during the months from January to March, or which is your Q4. And the very first thing here I will highlight is that you see the market's biggest misconception that the gold rally would affect jewelry demand, that has been proven wrong clearly. And from Titan to Kalyan, everyone has delivered very good results throughout the year, and especially in Q4. In fact, FOMO-driven and investment-led demand also increased because of the gold rally. So both Titan and Kalyan have reported very strong SSG numbers. Now, there is a slight contraction here you will see in the gross margin, but that is not a very big deal. Then if you look below, the EBIT margin has increased by 1.1% from last year to reach 6% because of operating leverage. And in the same direction, the net profit or PAT margin has also grown. It has grown from 3 to 4%. And finally, if you see here, the net profit grew by 118%, or it has more than doubled over the last year. So overall, I will say these are very, very good results. And in the con call as such, there was not anything very special that I should tell you here. And it is not like it was bad, but there is not anything worth mentioning separately. Now, if you look at the valuation, after this correction, Kalyan has come down to a PE of 27, and it is not like this is a small business. Like, look here, even after such a heavy drawdown, its market cap is 37,000 crore rupees. This means you are getting a mid-cap stock at a PE of 27. It is down approx 40% from its 52-week high, but even before that, Kalyan had touched a peak of around 800 rupees long back. But then those rumors of case of Motilal Oswal bribery, those rumors came forward, and since then it has corrected a lot. And if you check from that all-time high, it is down 55%. But see, nothing actually came out of those rumors, but the stock has not able to lift up since then. Anyway, the correction has already happened. Let us not waste our time going into all that. Now, let us understand, or let us say, let us address the elephant in the room. And I am referring to PM Modi's appeal not to buy gold. And then just 2 days later, the import duty was imposed, which made gold about 9 to 10% more expensive. Now, we will talk about this. Now, to understand how much impact this will have or can have, I will take very basic assumptions, and we will go to the first principles, and I will emphasize on the word assumptions because see, you must understand that only time will tell how much pressure will actually be there on the jewelry demand. We have to make a decision in today's uncertainty. So only time will tell whether we are right or wrong in our thought process. And now see, gold is seen as a status symbol in India. You would know how much importance it holds in weddings. And then it is also a savings and investment tool. So gold holds a lot of significance in our culture and our tradition. Like if I ask you, let us assume there is a wedding in your family. Now, just because gold suddenly became 9 to 10% more expensive, would you not buy it? Or suppose you are from groom's side and you are planning to gift gold bangles to the bride. But now, are you going to run around and tell everyone that you decided not to give gold because PM Modi said not to buy it? And besides this, jewelers also run gold savings schemes and old gold exchange programs. Customers were already opting for those because gold has rallied so much. So more or less, customers will keep coming through those channels. And that is our first counter argument. Now, the second thing is that jewelry demand is of 2 or 3 types. One is impulse buying, or say for daily wear purchases. For example, let us say you made extra profit in your business and you decided to gift something to your better half or children. So you will just go and buy jewelry on the same day. In such cases, as a buyer, you do not check the daily gold rate. So import duty will not make a huge difference over there or here. And the second category is wedding-led demand. Here, what happens is that demand only gets either preponed or postponed. Like if gold prices suddenly fall a lot this week, then instead of buying after 2 months, let us say you were planning to buy gold 2 or 3 months later, what people will do, people will arrange money and buy it immediately to save that extra, let's say, to buy the dip or save extra money. Or take another example, like after this import duty announcement, someone may think of waiting for 1 or 2 months, hoping gold prices may correct, say, 5% in the future. But if there is a wedding in the family this year, then the budget and timeline are already fixed. If not today, you will have to eventually buy tomorrow. But the gold demand, or say the gold purchase, that will stay there in this year. And then the third category is investment-led demand. But in all 3 cases, understand one thing. People who buy physical gold usually do not even think about let's say selling it later in the future. The typical mindset is simply to buy gold and hold it forever. People think about returns only after 3, 4, 5 years. And in reality, let me tell you, many people do not even think that much or think along those lines. They just buy it and move on. So in the current scenario, the mindset becomes that if gold is a long-term purchase anyway, then this 10% extra cost will eventually average out. Plus, suppose gold corrects over the next few months, then people will think, okay, Modi ji added 10% tax, but gold corrected by 5%. So effectively, only I am paying 5% extra. So that is what I am paying. So that is one mentality that will kick in. And another thing is the other way around. If gold prices continue going up, then people will buy out of FOMO. They will say, forget that 10% tax, long-term gain will automatically cover that anyway. What if gold rallies another 20% and I will keep waiting for this saving 10% tax, right? So my point is super simple, that gold is basically the stock market for crores of Indians. Just because price went up by 10%, people are not going to stop buying gold. But the market is treating Kalyan Jewellers as if the company will have 0 sales this year. At worst, what will happen is maybe Kalyan's sales and profits will not grow this year and remain flat year on year. But even if you assume that as the worst case scenario, then the current PE 27, that current valuation looks very, very attractive. And if you would recall, this is exactly what I told you in the case of Karwari High Tech in our contra investing video when tariffs were imposed. The balance sheet is strong, debt is next to nothing, fundamentals are good, return ratios are strong. So think of it like this. Even if this war continues for the whole year, the business will easily cross that 1 year of uncertainty. You are investing anyways for the long term, right? But you are getting this valuation because of this very uncertainty. And lastly, a 15% import duty is not something new. Before the duty cut as well in the last year's budget, total tariffs were already around 15%. So even then also people were buying gold. Yes, prices have rallied, I will agree, since then, but demand has stayed strong only. So that is there. Now, a humble request just before moving forward, if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simpli Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation. And I know I keep saying this, but you don't listen. But if you support us, I will be able to bring more such videos for you. So do like this video, and yes, also subscribe to our channel. Now, coming back to our discussion, there is one more thing I want to emphasize on: the business model. So whenever a business corrects because of some issue, our first approach should be to understand whether the opportunity in that business is structural or cyclical. Meaning, if we are buying the dip today, does this business have enough potential to cross 1 year of uncertainty? That is the first thing, and continue doing well for the next 3, 4, 5 years. Or is it possible that by the time the problem gets solved, the opportunity itself in the sector disappears? Now let us understand through Kalyan specifically. So jewelry companies earn from making charges, which are applied as a percentage of sales. So in such a case, what happens is, or I should say, the plus point for jewelers is that when gold goes up, their making charges automatically increase. And on the other hand, when gold corrects, people start buying in bulk. Then there is the benefit of volume. And that is the special thing in Kalyan or any jewelry business, which makes it a very unique annuity type model. And what an annuity type model basically means, that it is a business that can keep growing at 20-30% rate for years and years. Like on average, if I give you an example, the rate of gold itself increases by 8 to 10% every year. You would agree. I'm talking about long-term average. Now here, if Kalyan is able to bring 10 to 20% growth in form of volume, meaning the growth that comes from opening new stores, or if they sold 100 kg of gold last year and sell 105 kg this year, and you add both of those together, this easily becomes a 20 to 30% type growth model. And Titan has been doing this exactly. Its 5-year CAGR sales growth, if you see, it has been 32%, and its 10-year CAGR sales growth has been 23%. So Titan is a very good role model, and compared to Titan, Kalyan's even base is also very small. So I will say this is how you get opportunities to buy quality businesses at such good valuations, and Kalyan has just been unlucky, I will say, back to back. But actually, if you look at the business, and there has never been any problem with it whatsoever. And forget Kalyan, even Titan's investors have seen sharp corrections. Like we all know that Titan has been a wealth creator for Rakesh Jhunjhunwala. But Titan has seen its own tough times. Like Jhunjhunwala started buying it around 2002, 2003. During that period itself, Titan here, you will see that it had fallen by more than 80%. It took about 4 years to recover from that. Then around 2010 again, gold and silver corrected. And after the financial crisis, we saw a correction in Titan as well. It corrected by 60% then. And then a fall of 45 to 50% again was seen during COVID. So here you need to understand the long-term outlook of the jewelry sector. That jewelry and gold are deeply embedded in Indian culture and tradition. Indians see gold as a status symbol, savings tool, and also investment vehicle. That is why jewelry demand in India will continue for years, will be there. And today you are getting a stock from such a structurally strong sector at such attractive valuations. And it is not like it is a typical trading business. It is a retail model, physical business. And you are getting the valuation for such a fast growing mid-cap business at such rate. So I will say it is not a cyclical sector. It is a very structurally strong sector, strong business model that can continue growing for years and years. So you should, I think, explore or look into this business. Now, at the end, if you like this video, then please hit the like button, and yes, also subscribe to our channel. If you support us by liking the videos and subscribing to this channel, I'll be able to bring more such good analysis for you every week. So I'll see you in the next video. Happy investing.